All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, October 18th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, lots to get into here today. So we do have some earnings coming out. Netflix kicking it off, and you can see pretty good moonshot after hours here, trading up near 370. So basically right back to this previous high here. If we look on the after hours, big pop there. Let's take a look at Tesla. I don't believe that is out yet. Maybe, perhaps there a little bit. That is bouncing around here, so looks like something going on there, which we'll get into in a minute. But the big story on the day obviously came in the bond market again. And we had a 20-year bond auction today at 1 p.m. And, you know, this is kind of a ridiculous market. It's been, usually these bond auctions are a non-event, but it's kind of breaking up my day. Usually around 1 o'clock, I'm not really at my desk doing this type of thing. But, you know, this is the type of environment we're in, and we got to pay attention to these things at odd times now. But in any case, the 30-year did come in again via the ZB here. It hit double bottom. And if we look at the TYX, did not make a new high, but it did, you know, push up here. So up almost 1% on the day. If you guys follow TLT, that did make a new multi-decade low, down 86 basis points there, or 73 cents. We do have a volatility event tomorrow too. So Jerome Powell is going to be speaking at 12 o'clock. So my lunch is canceled. But in any case, he'll be speaking at 12 o'clock. My initial thoughts right now is the bond market is basically on fire, and just not a good thing. The Fed's obvious, goal has been to get the long end up. They've kind of done that now, right? It's been it was hanging out here for a longest time. The market didn't believe the Fed. Now the market believes the Fed. Does it get to a point, here's my question, does it get to a point where Powell has to talk the long end down? Because it's all about rate of change, right? The market can handle interest rates going up. What it can't handle is interest rates surging like this. So if you look at the TYX, it's starting to run away here. If you follow TLT, it's kind of in free fall. Looking at a monthly, we're coming down to 2007 levels here. So does he start to, not to say that they're actually going to change policy, but do they kind of jawbone a little bit tomorrow for that meeting? If we look at HYG, we've talked about that made new local lows as well. JNK, so not a good look here. I'm gonna be very interested to see where credit spreads are at the end of the week when that updates. Could be something around the corner, and I've talked about this before. If we look on the SPX, there's lots to break down here. But look where we closed: 43.1460, and 20 MA 43.1406. So they had to close it right on there. They're not going to make it easy, especially during an Opex week. And look what they did. They did close it above 43.1197 by 2 points. You might say that doesn't matter. It's so small. No, it matters. They don't do this on accident. So we technically did basically the opposite of yesterday. We had a big outside move yesterday, and then it came back in and closed within the range. If we zoom in, you can see, again, the range essentially is right here. There's your low, and then there's your high. We got outside, we closed back in. Today we got outside, and we closed back in. So is that telling us something? Did they leave the door open for a squeeze? I'm going to make that case right here. So take a look at the put-call ratio. That just made a new high. The last time we were this high was on the 4th of October, and then we had that big gap up on the 7th. Why am I bringing these up? Because this was the 4th of October, right before that mega surge. And then right here is a mini kind of move on September 7th. So maybe the market can push up here. I definitely can't rule that out. And as we look at it from a technical standpoint, as I've just pointed out, we closed above the 20 and we closed above this pivot low. So they did leave that door open, and they certainly did flush the market pretty hard into earnings. Let's take a look at Tesla here. So that looks like that is out. That's moving around quite a bit. Looks basically flat to lower. So nothing too terrible just yet for Tesla. Let's take a look at Netflix again. So that's holding up. Yeah, in fact, that's pushing up to 380. So Netflix definitely offsetting Tesla a little bit. Lam Research also reporting. I don't believe that is out, though. We did have earnings from ASML. That got hit a little bit today, down 4%. And that took down NVIDIA as well. There is a head and shoulder pattern here. It is not triggered yet. Don't be surprised if this tries to trigger tomorrow and then closes back above. I've seen this chart a lot lately, and when I see these head and shoulder patterns on big ticket names, big mega cap names that everybody's pays attention to, NVIDIA, Tesla, Apple, stuff like that, a lot of the time they can pierce this and spike that low and then bring it back up. It's also an Opex week, so they might not do anything. We might just, who knows, we could squeeze up tomorrow and then just stay right back in this range. Maybe we close at 43.50. Maybe we close at 43.75. Either way, the market here is still, I still have this priced in to get up into, 44.50. That's kind of the base case unless we start to roll over here and take out this pivot on a close. Could something else be going on? It's certainly possible. I mean, volatility held up all day long, but it did come back in by the end of the day. We do have Powell speaking tomorrow, so maybe, it held up partly due to that, partly due to earnings. Maybe somebody knows something. I know there's geopolitical fears out there, but, gold did reflect that a little bit today, but oil did not reflect that. I mean, if you look at crude futures here, yes, there was a rollover here, but even looking at the December contract, it was only up $1.70, right? It's not like this was really surging higher here. So I think some of it may be a little overblown. I think a lot of this, it wouldn't surprise me if at the end of the week, we finish mostly flat. I just tend to see these types of things during an Opex week. Then next week, who knows? Maybe we go down and fill this air pocket. I've talked about this before. I don't like that we just kind of pushed up without building any supports here. Looking at the hourly, we had that one little pivot right there, but this is kind of your big support level if we do break down. So right around 42.60, 42.70 in that range would be a level of interest. If you guys follow the spiders, that's about 426. Another thing that's interesting too, that I didn't even touch on, there's just so many things that kind of took place today, but from a technical basis, we hit this trend line again, and look where we closed, right above it. So again, right now, and I told my traders this morning, let you make the market prove it. Like I'm in, as far as day trading is concerned, I'm in scalp mode for the most part. I'm not playing directionally until this market could definitively break this range, right? So be very careful, very cautious in this environment. The liquidity is terrible. If you're watching the intraday ticks, I mean, it is very bad. And we had a slow grind down all day long, but it really had that feel like at any point we could get a big 50-point rally. So again, just be very cautious in this environment. But again, still to be on a technical term here, you held this low, you held the 20 MA again. And this pattern is still technically structurally bullish. So we have to respect that. If it breaks down and fails tomorrow, then it does. But generally during an Opex week, I'm going to be pretty neutral. And I'm going to kind of tend to continue to be that. Spiders are holding up in the after hours here. One more look at Tesla. That's back to the flat line for after hours. And Netflix at 380. So market seems to be holding up okay. Let's look over the triple Qs here. So that is trading up a little bit in the after hours. Obviously, higher weighting there with Netflix and Tesla. Again, held the 20 MA today. Little pullback pattern. There's really nothing wrong here, right? I'm just going to flip back to the non-after hours. And you could make a case here, even, I might be a little premature, but, just looking at an hourly, I don't know if it's the best here, but it's a little premature. But you can make a case you're trying to put in kind of a falling wedge type look right there. So we'll see. But again, I do think the NASDAQ has some catching down to do, and kind of these cyclical names have some catching up, which we've kind of seen over the last day or so. Triple Qs were down equal to the spiders today, so pretty much at parity there. The Dow down a little bit less. And then the Russell just still cannot get out of its own way here. I had a really nice day yesterday. Finally closed back above that 20 MA and then down 2% again today. Why did that happen? Well, look at the KRE here. Again, down 2.72%, fading that whole move. I talked about KBWB yesterday. That inverse head and shoulder has failed, so that is no longer a pattern. And again, there's a lot of dispersion out there, right? So when one sector's up, other sectors are down. There's nothing broad-based about any of these moves. And it makes for a very tricky market here. Banks coming in. Morgan Stanley, new 52-week lows. They reported earnings today. It did come off the lows, but, again, just a a weak name. Take a look at that trend line breaking down through the 200-week moving average. Probably have some support at double bottom there, but again, it's been a very tough market to gauge if you're going by sectors. Dow here, down 1% on the day, back below the 200, holding the 20 right there. Nothing really terrible with it today, even though it was an outside move. We'll see what kind of pattern it puts in by the end of the week. On the weekly, a little bit on the softer side. Again, there's still a chance if we start to head lower, you could fill that head and shoulder target down at 325. And again, the same thing really goes for the Russell at this point. We never satisfied that target. You got a wedge here. What if we just ping pong here and then push down to that 165 handle? There's nothing to say that doesn't happen. So again, I'm very, very, very neutral right now for the most part. And until this market really shows its hand, I think that's probably for the best. Again, spiders after hours up a little bit more here. Anyways, over to the SMH, down 2% on the day. We talked about that already. Here's another kind of point for the bulls, though. You had ASML reporting, and they were down. That was down 4% on the day. Nvidia was down 4% on the day. The SMH managed to not even test yesterday's low. So if you look at an intraday here, it never even challenged it. That's usually going to be a bullish sign. So whenever the semis are kind of down less than the market, the broad market, or at least on a relative basis holding pattern, I'm definitely going to give that point to the bulls, although you did close below the 20 MA. So bears recaptured that. Again, this is kind of a neutral chart here, though, right? So we didn't take out the low from yesterday. It's a positive, but the negatives, you're back below these three moving averages. And on a weekly, you could make a case you got a 20 MA rejection there. So again, watch that. Again, there's lots of cross currents going on. I think we're going to, we're getting close here to decision time for this market. I don't think we're quite here yet. I think we'll probably know sometime next week what we're going to do. But a lot of neutral charts out there that could go either way. Anyways, IGV here down 1.5, still a very strong sector, still a very strong chart pattern. So this is still the all-star for technology right now. 200, then you're 100, 20, and 50. You're above all of those. The only thing's missing is the 20 being above the 50, really, and the price being above that. But cloud software is still holding up really well, and I will definitely respect that. Transports, what can you say here? Down 3.5, took out the last 2 days of trading. Had a nice outside day yesterday. We couldn't get above that area, right? So we talked about that yesterday. We earmarked that, and just outside move right there. We'll see what that does tomorrow. If this takes out these pivots on a closing basis, you're going to 14K. That's really that simple. But we'll see what we get tomorrow. All right, let's get over to the 2-year here. So the 2-year still held up. That was up just about 1 basis point there. So 5.22%, nothing wrong here. And this can still attack that Fed funds rate if that happens. Again, I talked about this ad nauseum yesterday. Market's probably not going to like that. Makes me wonder if they're going to talk yields down just a little bit tomorrow, even if it's just like the smallest little bit, because I think the bond market is starting to freak out, and the Fed doesn't want a massive decline. They want an orderly decline in asset prices and an orderly rise in yields. But we'll see what we get tomorrow. Guess what? 5-year making a new high. That looks poised to hit 5%. 10-year making a new high. That's gunning for 5% as well. 30-year not making a new high, but it's getting very close. And again, I'm wondering if they talk that down tomorrow. All right, XHB here. So we got to talk about housing. Again, losing the 200. So we took out all these pivots here. This is kind of got to get saved by Friday. But again, weekly, you do have a lot of support down here at 70. There, you even have the 50-week moving average. But I think 70 is a really good level. 69, 70. You see that green bar, bull flag, then you tested, and then you reversed. There's also that previous pivot high right in this area. So right there, that's where I'd be a buyer of XHB for a swing. You can even see it right here. That's where you reversed and gapped up. There's also a gap fill, 69.84. So that I think is kind of your magnet level on XHB. But again, down 3.25 there, and closing below the 200 for the first time since, wow, you got to go all the way back to December. So it's the first time all year long. So XHB finally coming in. VNQ. outside move down 2% on the day. This was actually holding up earlier, if I'm not mistaken, and it came really down really hard in that last hour. Again, rejection at the 20. You probably need to hold this area by the end of the week. And again, that's going to be that double bottom. You don't want to see another weekly close below that. And again, I don't like the monthly here on VNQ either. Especially if you, I mean, God forbid, you lose that 200 moving average on a monthly close. This thing's in a lot of trouble. But again, we'll defer until that happens. But VNQ under pressure. XLF here, down 1 3/4. Again, we talked about this area. We went up into the trend line, convergence, 1, 2, 3. This is very rare. Call that a triple necktie. And members taking the Carnivore course know that. That's very rare. 1, 2, 3 moving averages converging in the same area with price hitting that. It's going to be resistance. What do we get? Gap and go to the downside. Why? Well, Morgan Stanley got pounded, right? And that brought everything down with it. XLF, not XLE, XLF here. We'll look at probably about 32.50 in the near term if it doesn't shape up. But if you take that out, eventually, I talked to you guys about 32 a few weeks ago. We never got there. That would kind of be your next level, maybe even 31.50. But either way, XLF coming in pretty sharply. KRE, gap and go to the downside. Got to hold 40. Got to hold this weekly pivot here on a weekly close. So 39.47. We take that out. There's problems in the financial market. KBE backing off as well. We talked about this area around 38. That would be resistance. And we did back off. KBWB, I mentioned this earlier. That inverse head and shoulders has failed. So that lasted all of one day, and it didn't even carry over to today. Again, look at bigger picture here. So this is my concern here for the markets. Financials are just not in good shape, and that's not a good sign, right? So you start to break this range. It's not a good look. Broker dealer is also getting pounded. Big outside move. Lower high, lower lows on the daily. So you don't want to take this pivot out because it's down to 450 if that happens. Crude, basically just an inside day, although technically the Z contracts, which we rolled over to, was green. It's not like it was green that much, though. I'm not going to make too much out of it. Excuse me. Short term, I still don't have it going much through 89.50 to 90. But if it flags up, it could have one more push into that, area. Still wedged between the 50 and the 20 right now. And again, this is kind of a little bit of a red flag here. I'm supposed to believe that the market's worried about Middle East conflicts, but crude was more or less flat today. I mean, I understand gold was green, but shouldn't this be up a lot more? Just something to consider there. XLE up 1%. So that was green and held up very well. And got to our 92 level and closed just below that. So again, you got that pivot high, those pivots there. This should need to stall out here, but it's had a nice pop off that 85 handle. I told you guys that level would be support. And again, there's your regular necktie, 50 and 100, or excuse me, 200 and 100. Gapped right into that, boop, pull back, and then right back up. So nice move for the XLE. It is into some resistance though, and XOP just doesn't care. This is into this level here. So that should be resistance, but it took this out very easily and got back above 150. So it looks like we're going to, we have a chance to close, back above that level there, but there still should be some resistance here in this 154, 155 area. But nice pop there. And then the OIH actually finishing red today, down $1.10. Nothing terrible there. The pattern is still fine. Uranium here, CCJ, holding up okay. I still think this is in backing and filling mode. And the same thing with URNM. I'm just leaving these alone right now. Nat gas, a bit of a flat day there. Still holding the 20 moving average. We'll see how this acts off the inventory report tomorrow. And we do have that little weekly gap there. So I'm wondering if that gets a bid into that report. All right. Dollar index here. Finishing at 106.56. Again, I said yesterday, you have a pop, 1, 2, 3 pullback, and you're back above the 20 MA. Is really that simple. The dollar, there's no sell signal on it, at least not right now. You are into weekly resistance, but there is nothing to say, and you do have a weekly shooting star candle, but there is nothing to say this doesn't just consolidate and push higher. Again, the monthly trend here is very strong. Just be aware of that. Yeah, you do have a big red bar there, but the trend is up, and you had a bear pattern here that failed. So when that happens, I'm generally not going to be bearish. But again, 1, 2, 3 pullback. We'll see if Powell talks it down. You take this green bar out here on a close, I think, well, you have some support on 105, but 104.50 is probably your next stop. Gold here, again, nice day, although it's getting a little short-term stretched here. Finishing at 1962, up $26.40 on the futures. Again, going into a couple of pivots here, and you just went from 1825 to 1975 in what, 3, 6, 7, 8 days. So, you know, might need to do a little stalling out. Your big level is 2000. I think that probably wants to get tested, but it might need to do some pulling back first. Again, if Powell talks down yields, talks down whatever, sounds dovish, maybe gold comes in. It's certainly possible, but it's acting well. Silver also went up into 2350 psychological level, 50, and again, I did it again. 100 and 200 moving average. Kissed it and then pulled back in. No problems here, just a little short-term stretched. But if this consolidates, it's going higher. Platinum pulling in here as well. Still looking for pattern on this one. It hasn't got me quite interested yet. Palladium also pulling in. And then copper here, testing the 20 MA. I think this has to go to 340, as you guys know. I don't really see anything that makes me think otherwise. Bitcoin continuing to hold up and continuing to impress. So again, you had that big outside move on the fake news and it's still holding up. So go figure, right? Again, if this flags, it could have another move up. I'm also kind of thinking if this flags, it could end up being a failure. Why? Because every other flag has been a failure for the last 6 months on this thing. So I don't trust any move here. But short term, 28.5 is resistance. 30,000 is going to be kind of your bigger level. If you close above that on a weekly, then things get pretty interesting. But right now, just, you know, it's kind of taking a breather after that big move, and we'll have to wait on direction there, but I'm not touching it at this moment. All right, lastly, let's take a look at the spiders. So we're at 430.93 in the after hours. Netflix is at 384, so nice pump there. That takes you all the way up here. So near that red bar high. Let's look at Tesla. Yeah, that's up 2 points in the after hours. So ES here, managing to recover some gains. Watch that, or I should say losses. Watch that 20 moving average there by 5 p.m. And the NQ should hold the 20 MA by 5 p.m. So you get a Globex close there. Could be a short-term positive. Again, be really careful in this market. There's a lot of cross currents going on. The bond market is literally on fire. HYG is on fire. TLT is on fire. This is supposedly the most stable asset in the world, and it's the most important asset in the world, and it's in complete free fall. And the market is really not reflecting that, right? Like, we should be puking right now, but we're not. So you have to keep that in mind. And also, like I said, look at that put call. The last time we were up here, we did squeeze pretty hard. That doesn't mean we can't. No, doesn't mean we can't go to 1.4 tomorrow or 1.8. We could dump out to the 200 and slice it. So just be aware of that. But until this market really, you don't have to front run the range break. When this range breaks, you'll know it. You don't have to front run it. We could just jump on when the market shows us its hand. It's better to do that than get whipped out every single day. The liquidity is terrible right now. And they're trying really hard to get as many people on the wrong side of the trade as they possibly can right now with all this whipsaw. So just be aware of that. But again, technical picture, big picture. You held the 20, you held this low, you held this trend line too. And the QQQ as well also held that 20 MA. So short term, I'm going to give the market the upside bias, even though we did dump out until bears prove it. Bears prove it, then all bets are off, and I think we can slice that 200 and possibly even a little bit lower. But again, we'll have to see how this shakes out into Friday. That'll tell us a lot more. It is an options X, so I don't think we break down before then unless we get some major geopolitical developments, which is a possibility. So anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. I will talk to you guys all tomorrow.